All right. I think we are live. All right. Welcome everyone to the Trade Speakeasy for our monthly crypto update with Winston Buckley from MetaRise. As always, we're so grateful for Winston's time. He always comes with so much information and keeps us updated. And as many of you have probably seen with a lot of the different congressional meetings and a number of different Fed meetings, the whole issue of crypto, if it's a security, if it's not a security, how it should be treated, what platforms can offer it. Is it being offered as a security or not? What is its tax implications? How does the SEC want to update their regulations facing different cryptocurrencies? This has been, all over the news and has been just front and center with a number of different congressional meetings, with a lot of, back and forth about how to really update the system so that crypto can be a legitimately traded in a sense that it can be easily taxed. People understand how, where they're at in the tax system, how it should be registered and so forth. So just to give us an update on this really important issue, Winston is going to run us through, crypto versus the law and where are we at? Where are we going from here? Seems like every week somewhere we're on the where are we going from here? Because month to month, it feels like the whole crypto world changes. It has a very, I don't know if it has a very long or a very short shelf life. Either way, it's like the whole world of crypto changes massively in just, matter of weeks. I mean, it's like our last time together, we skipped last month. So now, it has been 8 weeks, but you think like 8 weeks in the life of Tesla wouldn't change the entire agency of what Tesla is. But the way crypto moves and develops just shows the cusp of innovation is just moving so rapidly. So thank you so much for your time. And I will let you take it away, sir.
Thank you so much. Yeah, I'm so glad to be back here with the Trade Speakeasy family. It's been a while. We had to take a little time off. You all that have small children know how the end of the year can be. May is just a busy month with holidays and starting to travel and all that. So yeah, we had to take a little brain space there just to kind of, get our bearings. But yeah, glad to be back. And yeah, thanks for that summary and that introduction. You're so right about the space and how fast it moves. And it still just speaks to how nascent everything is and how young the space is. And so much happens in such a short period of time because it's so little. So yeah, we will definitely talk about regulation and what's happened and where it's going. And I guess we can maybe call this series the Where Are We Going series.
Yes. Where are we going next month?
There you go.
And for those who are joining us live, I'll be monitoring the chat. So please feel free to ask any questions and I can hop in and ask, throw those out to Winston as he's sharing with us. So let us know what you think. If you have any questions, if we've missed something or comments, let us know below.
Absolutely. So, all right, I will go ahead and get my screen share going.
Chat. So please feel free to ask any questions and I can hop in and.
All right. So, all right, thumbs up if you can see my screen. All right, good deal. All right, you all. So please like and subscribe here to the Trade Speakeasy channel. Also, if you'd like to follow us at MetaRise, there, a lot of you may be joining by your phone, but there's a link tree to where you can find other material from MetaRise. So today we're going to be doing the law versus crypto, or crypto versus the law. And I always have to start with the disclaimer, so take a screenshot. But basically, I'm not a licensed financial advisor, and this information is for informational purposes, educational purposes. So make sure you don't use this to use as your investment advice. Always seek advice from a licensed financial professional. All right. So let's dig right in. We are going to start with talking about the lawsuits that are out there. There are a number of lawsuits that are out there by the SEC, the Securities Exchange Commission, against crypto brokerage firms or crypto companies and for various reasons. So I want to make sure that I kind of dig into a few of them, some of the big ones, the big landmark cases that are out there right now, and just talk about the differences of those cases. So we have a big one versus Binance, COINBASE, and XRP. So we're going to dig into those three. But first, let's just talk about the SEC's role, the Securities Exchange Commission's role. So their basic mission is to protect investors, to maintain fair, orderly, and efficient markets, and to facilitate capital formation. So basically to try to make sure that people don't get scammed or swindled by companies or brokers or financial services companies and the like, to maintain fair markets. So basically to try to keep a even playing field for all the participants out there and make the barriers of entry the same, and to facilitate capital formation. So, one of the reasons why we've been able here in the US, been able to flourish in the financial sector, especially around securities, is because there is regulation and there's allowance of certain things to happen. So the SEC has a very big task, and the SEC is not just one thing. So some people may think about the SEC like it's just a body that enforces the law, but they also have investor education as well. So a lot of resources that are out there, and I definitely invite you to check out the SEC's website. So depending on where you are in the spectrum, I know some people that are crypto native and totally believe in the Satoshi vision, not the token, but Satoshi's true vision. They may look at the SEC like they're just a bad guy, but the SEC is not just anti-crypto. And we're going to dig into the SEC's position on a number of things and how that's changed over the years. So they really act as a neutral party, and they're not a good or a bad guy. They have to maintain the law as best as they can. So some of their landmark cases that they have won in the past have been against, and then there's a bunch of them, but just wanted to point out a few of those. One is Theranos. I don't know if y'all remember the company that supposedly could take a drop of blood and run all of these tests, or run a myriad of tests in a matter of seconds. And it all turned out to be a big fraud. So a lot of people, a lot of big investors, a lot of companies and private investors got swindled in that. It just all turned out to be a bust. Bernie Madoff was probably the one of the 21st century. It was, I would argue, for the US, one of the biggest and maybe the largest and longest running Ponzi scams, Ponzi schemes, that by somebody who actually served on a lot of regulatory bodies. So, that blew up around 2008, along with the financial crisis. Enron was a little older. That was back in the 1900s, as we'll say a joke sometimes, but another one where Enron was cooking the books and a lot of people got swindled. So I have this little gif here of a Simpsons episode just talking about the ride of Enron, Enron's ride of broken dreams, and how so many people, unfortunately, people that either work for Enron or some people that solely invested in Enron, their whole retirements just blew up because Enron basically was cooking the books. And this is a very, very old case, but the USC versus HOWEY established the HOWEY test back in the 1940s. And we're going to touch on the HOWEY test because this directly ties into what the SEC is using to determine its cases against the firms that we touched on earlier. So what is the HOWEY test? There's just 4 things that the SEC looks for to determine if something is a security or not. And those 4 touch points are: 1 is if it's an investment of money, if there's some type of investment of money, either to a company or to a person or individual. 2, if there's a common enterprise. 3, if there's an expectation of profit from that investment. And if that expectation of profit, if that is derived from the efforts of others. So, is that a company? Is that people that's working in the company? Those are the 4 things that the SEC uses. And if for those of you that like to read, the Congressional Research Service they've done something in 2018. It's titled Securities Regulation and Initial Coin Offering. So this one I feel like it's a really good body of work to show how the SEC and other regulatory bodies came with their premise as far as what's a security and what's not a security when it comes to cryptocurrencies. And some of the language is still a little vague, and there is some admittance that some of the things are not extremely clear. However, the ICO boom, for those of you that have been around in 2017 and 2018, I remember the ICO boom, and that was the initial coin offerings. So a lot of projects were basically selling their initial tokens on the market, and a lot of people made a lot of money, especially the creators of the projects. And so a lot of those were deemed as securities in 2017 and 2018. So what I want to touch on is the SEC's position. And this is back in 2018. So we're just going to play just a minute or so of these two videos. So this is the former SEC chairman, Jay Clayton. And I'm just going to play just a little bit of what he felt about Bitcoin and cryptocurrencies. And this is back in 2018. Again, this is the former SEC.
Securities, or are you going to carve out some exceptions? And when are you going to make a clear ruling and decision on this?
Okay, so there's a lot in that area. Let me start with the technology, distributed ledger technology. Incredible promise. It can drive efficiencies not only in the financial markets, but in a lot of markets. Fine. Two areas in the financial markets where distributed ledger technology has come to the fore. Cryptocurrencies. These are replacements for sovereign currencies, replace the dollar, the yen, the euro with Bitcoin. That type of currency is not a security. Let me turn to what's a security. A token, a digital asset where I give you my money and you go off and make a venture. You have some company you want to start or something you want, and in return for me giving you my money, you say, you know what, I'm going to give you a return. Or you can get a return in the secondary market by selling your token to somebody. That is a security.
All right, so there you have it. The former SEC chair back in 2018, Jay Clayton, he deemed that Bitcoin is not a security based on that premise. And again, if there's an investment where there's an expectation of return from a token, then that's a security. And I want to play just a little bit of Bill Hemmon, the former SEC director of the Division of Corporate Finance, because he said something that's very interesting, and this ties into the XRP case.
So you said in your speech that neither Bitcoin nor Ether would be considered securities and thus not under the purview of the SEC. Can you very briefly explain what your reasoning is?
Sure, Bob. These are complex facts and circumstances tests, but when we look at Bitcoin or if we look at Ether and the highly decentralized nature of the networks, we don't see a third-party promoter where applying the disclosure regime would make a lot of sense. So we're comfortable.
All right, so that is an opinion by Bill Hemmon back in 2018 that said that both Bitcoin and Ethereum are not securities because there isn't that third party. Now, a lot has changed from 2018 to now. Ethereum has moved from proof of work to proof of stake, and some people will argue that it is a security because of that. Some people will say no, because it's still decentralized and there's not one party. There is an Ethereum foundation, so that's a question mark right there. But Bitcoin itself, there's no central party to look to, and that's why even to this day, it's still been excluded from a lot of the lawsuits, because who do you sue? So fast forward, we're going to take a look at what Gary Gensler, who is the current SEC chair, what is he saying now about cryptocurrencies?
Welcome to Real-Time Insights. What's next for business leaders?
Gotta add there.
Culture can no longer be driven by proximity.
When you create value, that creates
promotion of this company,
be purposeful, be transparent.
Check out cnbc.com/realtime insights.
All right,
The
so let's
SEC Chair
fast
Gary
forward.
Gensler joins us this morning in a first on CNBC interview. Chair Gensler, it's
All right.
Look, I'm not going to go into any one set of conversations between the agency and a company, but we've had discussions with literally dozens of crypto incumbents, including the ones that you just mentioned. And what we find is this is a field that's built, the whole business model is built on non-compliance with the U.S. securities laws. And we're asking them to come into compliance, and they're going a bit of catch us if you can. That's a sort of.
All right, so that's Gary Gensler's take, basically how he feels about most of the projects and most of the cryptocurrencies out there. And I'm gonna play one more part of this.
It seems entirely predicated on the greater fool theory. Do you disagree?
Look, we as an agency are meant to be merit neutral, Jim. There's a lot of question. There's 10 to 20,000 tokens. Actually, in the COINBASE complaint, we note that they have, through the COINBASE wallet, you can trade 16,000 different tokens. And there's a lot of debate as to the use cases and whether there's any there. Look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen.
Okay, so you kind of get the feel of the sentiment of at least the current chairman of the SEC. So basically, he feels that we don't need any more digital currencies because we already have them, which is the US dollar. And if you're in another country, then your dollar in the digital form. And that majority of the space is just ranked full of non-compliance and people that don't want to comply with the law. Now, that is a very arguable point. You can catch a lot of congressional hearings about this. You can get a lot of takes from projects themselves. Now, I will say this, being in the space since 2017, yes, there are a lot of scams that are out there. There's a lot of stuff that's just pure trash. Me being in the space, I have gotten scammed before and I have lost money. And even knowing what I know and knowing how to navigate, there's just scams out there. On the flip side of that, it exists in any market and it exists in the traditional stock market. So I've lost money in the stock market as well. And there's a bunch of scams like the deli in the Northeast America that's worth billions and billions of dollars and is heavily invested. And so, you know, there's scams on both sides, but, you know, I cannot disagree with the chair. And this is where my crypto bros and sisters may be mad with me, but if we want to be honest, there's a lot of scams that are out there, but there's a lot of good as well. And we're going to touch on that. Also, this is a list of some of the securities, or excuse me, some of the tokens and the projects that the SEC has claimed are securities and some big names that are there. So BNB token, that's the Binance token, XRP, I won't go through all of them. Cardano, Solana, and Polygon, these are probably the biggest projects that are on this list, but there's some other big ones on there as well, like Flow, Sandbox. So if some of these are your favorite projects there's a possibility that it will be listed as SEC or determined as a security by the SEC. Now, the SEC is a large organization and they have several divisions and several things that they are mandated to do, as I stated before. Now, one of the commissioners of the SEC, or the SEC commissioner, Hester Pierce, she doesn't quite agree with the methods that the current SEC chair is going about. She doesn't quite agree with the way that they're choosing. I'm trying to use my words carefully because I'm not anti-SEC and I'm not pro-SEC. So she doesn't quite agree with the way that enforcement is used to regulate the space. And she's quite disappointed with the methodology that's going forward. So she states that if we had a better framework in the US, you would see more activity happening here. So what's happening is you're starting to see regulation in the Eurozone and several places around the world where there are Bitcoin ETFs already. There's clear pathways to registering as a SEC or a broker of securities. And so here in the United States, it's still a little unclear, even though there is a claim that it is a clear path to registration of securities for cryptocurrencies. It's not quite that clear, and a lot of projects have expressed their frustration around that. Now, moving on to the XRP case, the SEC is claiming that XRP or Ripple has sold XRP as an investment contract without registering. They made misleading statements about XRP to investors and use XRP sales to fund Ripple Lab operations. So basically, they sold their token Ripple in order to fund their operations. that may be true. Misleading statements, I'm not so sure about that. But I think one of the biggest sticking points is them selling XRP without an investment contract. So a lot of this happened during that ICO boom, that period from 2015 to about 2019, just the selling of XRP. They pre-mined a lot of it and just put it out, some of it out in the market, and they held quite a bit of it as well. So just going back to that HOWEY test, because this is what the SEC is using. This is this article that's here to the right. This was in October of 2022. So Ripple, for the first time, they disclosed that they had less than 50% of all the XRP holdings. So this would point to a clear enterprise or an effort by a company. And so a lot of people feel like XRP is going to win this case, but I'm not so sure, because there is a company that's identifiable. There is an effort by one body, and a lot of people have an expectation of profit. So, I mean, let's be real. A lot of people are championing for XRP to win the case, but I would beg the question, how many people are actually using XRP? Now, XRP is widely used for money transmittal. This is not a small company by any means, and in the Far East and in several places in South America, there's a lot of money that's moved. I'm talking millions and millions of dollars that are moved cross border with the Ripple ledger with XRP. So they are definitely doing what they set out to do. So this is not a small town company at all. But a lot of people, if you go out to the XRP army and you go onto YouTube, you will see that a lot of people are, they want XRP to win the case, but that's for their own profit. And a lot of people aren't using that. And I was a part of the XRP army. So, I'm not, hopefully I'm not turning anybody off, but I know what the XRP army, what that whole feeling is like in that space. So moving on to Binance, the SEC is saying that Binance, they are an unregistered exchange, broker, and clearing agency. They offered unregistered securities by the sale of several tokens, some of their own and some others. And they also failed to restrict US investors from accessing Binance.com. Now, Binance is split into many parts, but there's a Binance.us, which is supposed to be only for US customers. And there's a Binance.com. For a period, US customers were allowed to use Binance.com. I know, because I've used Binance.com back in 2017. And then there was a point where they said you can no longer use this exchange. You have to go to Binance US. But what the SEC, part of what the SEC is arguing is that they are knowingly allowing people to use their service with a VPN. So that's something that may or may not be the case. And the SEC, I think they do have some documentation to support their view. Now, one thing that was really shocking to see, and when you see stuff on YouTube, when you see stuff on TikTok and other social media channels of people just acting crazy or saying stuff that you would think that they would never say, you just wonder, like, why would you do that if you know that you're recorded, or just the day and age that we are in, and especially via email. But this is something that the Binance chief compliance officer back in 2018 said, and this is something that the SEC put on their Twitter page, and I'm not going to say the actual word, but the COO at the time said, "We are operating as a effing unlicensed securities exchange in the USA, bro." So this is a pretty alarming piece of evidence that was put. I don't know what the guy was thinking at the time to even say that, and probably just was feeling itself. Early 2017, early 2018, late 2017. That was one of the bull runs, and so maybe he just felt hired, and I don't know what the rationale was at the time. But the SEC is also alleging that Binance again is offering those unregistered securities, but BNB token, BUSD, which is a stable coin, and also have the BNB Vault. So they have this staking as a service that they're providing as well. And the SEC is saying that is a big no-no. And lastly, moving on to Coinbase. Now they are alleging that the SEC is alleging that Coinbase also is an unregistered securities exchange, broker and clearing agency. They also are offering unregistered tokens and sale of securities in connection with staking as a service. So some of you may be familiar with Ethereum staking, for example, where you can get some money for staking to help secure the network. So you get a reward for that. And Coinbase is saying that they aren't allowed to do that. Kraken, which is another big exchange in the US, the SEC said that, you know, this is a violation, and Kraken just totally stopped it. They stopped that service. Coinbase is saying that, you know, there's nothing wrong with what we're doing, and they haven't stopped that service at this time. But we're going to see when the SEC deemed that or alleged that XRP was a security, Coinbase took it off their exchange. But this time around, Coinbase they're saying, okay, we're going to fight this case against the SEC. Now, what's a little interesting with the Coinbase case is Coinbase seemed from the beginning to kind of do everything the right way, at least, you know, from the way I see it. So some of the early investors were Andreessen Horowitz, Y Combinator, USAA, BBVA, Draper Associates, and there is a long list. They raised millions and millions of dollars before they went public back in 2021. They went public. And so they got the clearance from the SEC in order to go public. So this one is a little confusing to me because they seem to be doing everything the right way and seem to have a clear path of communication with the SEC. But I guess some things happen in between 2018, 2021, and now. And this little picture here is just the filing that Coinbase had with the SEC prior to them going public. So something happened between that time and now where the SEC is saying, well, Coinbase, you're doing something wrong. I do think that the fallout from Celsius, BlockFi, Terra Luna, and FTX really played a part in this because those things were allowed to continue. And, you know, it really hurt a lot of investors and hurt the banking system to a certain degree. And so I think at this point, the clamps are being put down on, you know, what are securities and what's allowable and what's not allowable. So I don't know. This Coinbase case is going to be very interesting on how it turns out. So the last piece of video I want to play, this is from the Coinbase Chief Legal Officer, Paul Grewal. I hope I'm saying his last name right. But he has a take on, you know, what he feels about securities. And so Coinbase has a very interesting viewpoint when it comes to securities.
The listing these assets is appropriate as non-securities. Here's the thing, though, David, I think that sometimes gets lost. We want to be able to list assets which qualify as securities. It's one of the reasons why we've been banging on the SEC's door asking for rules for many months now. It's also one of the reasons why I testified today in support of this initial approach that the House Agriculture Committee and the House Financial Services Committee together have proposed. It goes.
All right, so there you have it. So Coinbase wants to provide securities. So they're saying, okay, if these things are these securities, then we want to provide them. And so for the people that are kind of worried about cryptocurrencies being labeled as securities, I say don't worry about it because stocks are securities, and the average investor, well, not all of them, but the average investor has access to a lot of stocks out there. So, you know, if things are deemed as securities, then that's okay because exchanges want to offer the securities if they are indeed labeled as securities. So Coinbase has been one of the ones, you know, I've questioned some of the listings, but they do have a process in order to list certain tokens and cryptocurrencies on the exchange. And it seems that they try to do it with guidance from regulatory bodies, but maybe there was a misstep in there somewhere, maybe not. We shall see. So we're going to see how this case turns out. So my opinion, and kind of rounding the corner here to the end of the presentation, my opinion is that most cryptos will be labeled as securities. I mean, if you look at the HOWEY test and what deems a security based on the current law, does the law need to change? Maybe, maybe not. But based on the current laws that we do have, most of them probably will be securities. When you start to look at, especially in the DeFi sector, and I like DeFi, I'm a fan of DeFi. I've used both CeFi and DeFi. DeFi is decentralized finance for those who don't know what that term is, and CeFi is for centralized finance. And so with DeFi, I mean, there's a lot of products that aren't necessarily available to the regular investor through the traditional finance system. But there's a lot of derivatives that are there. So when you start talking about tokenized stocks, tokenized representations of other tokens, so when you start wrapping tokens to represent a contract on another chain, then, okay, are we starting to look at securities? Because when one thing starts to represent something else, you start to get into issue there. And then a lot of people have these, DeFi investing strategies where they take from one exchange and then they invest into another exchange, and they take the tokens from the tokens that they're issued. So let's say if I either stake, I might get a liquid staking token, or if I invest in one token, I'm getting another one to put into another platform, and then rinse and repeat. Then it's starting to kind of sound like derivatives, which in most cases in a traditional market would be a security. So we have to kind of be real about that. Many projects will fail. Most projects are going to fail. It's kind of like the internet boom back in 99 and 2000. Most of the projects that just put a .com, or companies that just put a .com without any real use case, they fail. And a lot of companies just boomed because they were taking advantage of going onto the internet. But really, every company needed to be on the internet, but just going onto the internet didn't necessarily mean that their company was better. So the same thing is happening here in the crypto space. A lot of speculation. All of them are going to change the world. All of them have the best supposed use case and white papers, but most of them are going to fail. There's going to be some heavy fines that are going to be levied, probably against COINBASE, probably against XRP and BINANCE and some other exchanges. BINANCE may or may not be able to continue in the US. So we'll see, but some brokerages won't be able to continue, but probably going to be some slaps on the wrist for some, and some is just going to put them out of business, but heavy fines. And then after that, once we figure out what's a security and what's not for cryptos, once the fines have been settled, the space will flourish. And I say that because we have ETFs now. There's about 30 something ETFs, Bitcoin ETFs, that have been filed and all have been denied by the SEC. However, BlackRock just, if I'm not mistaken, a month ago filed for a Bitcoin spot ETF. So we have a futures ETF already, but it's not a spot ETF. And Grayscale already has a Bitcoin trust, but a spot ETF would represent 1-to-1 for the Bitcoin that it holds. And this is a big deal because BlackRock has only had one ETF denied, and it was like a blind ETF. So people didn't necessarily know what was invested in. And I hope I'm explaining that the right way, but they have like 570 ETFs that they filed for that have all gone through. So that has caused a lot of speculation and a lot of price action, positive price action around Bitcoin because of that. But ARK has refiled, Fidelity has filed, Valkyrie has filed, VanEck, Invesco. So a lot of them are piling on again. Some of the ones that filed before are now piling in again since BlackRock has put their hat in the ring. So some people are like, well, BlackRock, with their record and as big as they are, I think they're like the biggest hedge fund in the United States. Like, what do they know? That's what some people are thinking. Is there something that's there? And so a lot of people are positive about that. What's interesting is BlackRock chose Coinbase for their custody. So maybe there's something there, maybe not. Who knows? But I would, who knows? Do your own homework. Do your own homework. I'm not going to say that it's good or not. Also, there's an exchange, a crypto exchange, EDX exchange, that's backed by Citadel, Fidelity, Schwab, and some others, big names, big household names, for a cryptocurrency exchange. And that has already started. And they offer right now Bitcoin and some other ones like, and I'm gonna touch on them in just a minute. It kind of makes you wonder why. I know why, but it's like, why are some of these other ones Bitcoin, obviously, but you have these large institutions, financial service companies that are backing a crypto exchange. So there's obviously a future there. The partnerships are continuing. You see one with Google Cloud and Polygon. Also Amazon. Amazon is heavily building in the blockchain space, and they have a partnership with Ava Labs. And I mean, the list goes on and on. I can do a whole hour on just partnerships that are still forming. So, you know, if this space is just like a total scam and there's no use case, I would argue, why would companies such as Google or Amazon, why would they partner to build the next iterations of the internet, Web3? Oh, duplicate page there. All right. So lastly, you know, I just want to say, just be careful. You know, there's a lot of action that's happening in the space, a lot of volume that's there around certain projects. Some of them being the meme coin projects. I'm not a fan of them. You know, some people like Doge. Some people like one that really took a lot of steam this year, Pepe, and it has over $1 billion in its valuation right now in its market cap. I'm not a fan of it because people, you know, lose a lot of money in those things. But hey, if you make some money in that, more power to you. This is just not my thing. So be careful with that. So projects with no utility, you know, meme tokens, some meme tokens, Doge may or may not survive. Who knows? We just don't know. But just be careful. So one of the tokens that has really rallied in the past month is Bitcoin Cash, and Bitcoin Cash is up 82% in the past 7 days because of that EDX exchange announcement. And Bitcoin Cash is one of the ones that's offered on that exchange. And I think Satoshi's vision might be as well. So these are basically forks off of Bitcoin. Those early holders of Bitcoin, they got a lot of the different forks. So with projects, with a lot of crypto projects, the developers can fork the chain. So basically they can make a new token off the chain. There might be a dispute as far as where the project should go. And so some developers will just fork the chain and make another version of it. So there's Bitcoin Cash, which is one fork, Bitcoin Satoshi's vision, which they feel like they have the true vision of Satoshi. And that's why the coin is named Bitcoin SV Satoshi Vision. There's Bitcoin Diamond. There's so many different ones. And these are rallying because people are speculating that, okay, there's going to be, you know, some volume that's going to come, and that may be the case. But just look at what's happened or what has not happened on chain with Bitcoin Cash and Bitcoin Satoshi Vision. There's no development there. So just be careful. If you're a trader, trade away. If you can make some money, make your money. But if you're talking about long-term investment for utility, just really be careful. All right, so that's it for my presentation. Again, like and subscribe here at Trading Speak Easy. But if you want to see more from MetaRise, you can check it out there at Linktree/MetaRise. So that is my presentation.
That was phenomenal. I mean, I've been watching all these videos where people are like trying to explain and get people up to date. And for those, especially those that don't know crypto well, this was just a phenomenal presentation to like help people really get the full background and see where we're going. Just like a completely side question for those who are trading more broadly in, just generally in stocks and are looking for those more risk on kind of avenues. So they like those higher risk, faster moving, momentum moving stocks. Of course, crypto has always been a positive, has always had that volatility that has helped people make those faster gains, let's say. But now because of a lot of, the need for development in the regulations, do you think that those who are new to crypto, that maybe they should take like a step back from crypto and focus on equities while the laws are being, are being amended or brought up to date? Or do you think that actually there are avenues or means in which they can trade in the crypto space that gives them that volatility exposure, but without frustrating them with having to know constantly keeping up to date with like the legal changes.
Yeah, yeah, absolutely. I am very involved in financial literacy. So, one of the things that is, even though, I have a company that talks about blockchain and cryptocurrencies, people need to make sure that their investment is aligned with their overall portfolio and their overall strategy. So for most people, I would argue that this needs to be the smallest part of their portfolio. And, one of the things that I found that was very dangerous a few years ago was, these things that would say, well, crypto is the poor man's chance to catch up. This is going to be the thing that's going to close the wealth gap. And so many things like that. And for some, it probably did. Anybody can make the right investment at the right time in something that has a very small market cap and it takes off. And yes, it does change your life, and it has changed a lot of lives. However, it's also changed a lot of lives for the worse too. So because of that, for people that are novice traders, this is not necessarily the playground that you want to be in, because the bullies are here. There are large institutions, and there are people that are professionals, traditional investors that see the inefficiencies in the crypto market and can manipulate it and, tear people up all day. So, yes, the volatility is there. The volume swings are there. But, you need to know what you're doing before you come here. And this is the smallest part of my portfolio as well. So, for some, if you're very risk averse, hey, put all the chips on the table, but just know that, overnight, it really can disappear. I've seen so many sad stories.
Yeah, I resonate with that. I can understand that, because there's just so many people in the community that were new to crypto and then felt like, okay, this is just like another stock. Essentially, that's how they, in a way that they viewed it. And of course, the amount of education now that is being presented to people, there's such an accessibility to data that we didn't have 4 or 5 years ago. Trying to understand all of this in like 2019 was crazy, because just the information wasn't accessible. It wasn't out there unless you were taking some university course where the professor this was where they specialized. But for those that, let's say that, okay, there's a lot of newer traders at the Trade Speakeasy, and they want to have exposure to crypto. So what would be an area where they can get exposure without putting them at risk of needing to know all of everything that's happening on the legislative front, and the regulatory front? What would you recommend is like an area of focus where it's less likely to have some like major legal changes or regulatory changes for them?
Yeah, I would say to start with Bitcoin, because right now it's been excluded from the lawsuits, because who's to sue? There's who do you sue, the code? And so, the SEC has not gone after any companies for having Bitcoin on their exchange. And then some will say, well, Ethereum falls in there, but it's still kind of up in the air. So I would say start with Bitcoin, because, there's a lot of custody that's happening with Fidelity and, JP Morgan, a lot of these big mega cap financial institutions. And so, now that we have pension plans and we have all these large institutions that are depending on Bitcoin to a certain degree, then I would say start there and just do the research around it first, even before kind of what we call in the crypto space degenning in. That's what I did. That's how I learned about it and got wrecked. But I would start there and just kind of do the research around it and truly see if this is something that you're even interested in. Because while we talked about the investment side of it today, there's that tech layer. And if that makes sense to you, if you want another tech piece in your portfolio, then this would be, this is where you start. So, right now, if you're investing in the SEP, most of your investment is probably already tech. So do you want another layer of tech in there? So that's something to kind of think about when you start investing in crypto.
That's actually a really good point. And yeah, like you said, I just wanted you to really repeat that Bitcoin is basically a beast unto itself. And then the SEC are really running through, they're focused on tokens, or, and then there are these gray areas. But if you're an ant, you always want to be marching behind the elephants. So if you already know where the strong institutions are, that they're going to, if they have to get into a legal battle, they have the legal resources to be able to defend themselves. And if you're on the same side as them, then you will end up benefiting from some of those, if there are legal changes to be needed or to be had. I mean, they have those legal teams that are going really going through and then looking at the laws and then making sure that they're on, they can justify what they're doing with other people's money, which is, comes with massive responsibilities and burdens on the side of entities like Fidelity. So if you don't want to have to do the consistent research in what's happening, what the changes are, in the regulatory environment, then, walking behind where giants have already kind of flattened the path and given you a bit of clarity, I agree. I think that's helpful. And generally that's helpful, not just for crypto, but in other areas where you might be wondering where are the kind of the bumpers of the lane, where are the boundaries, and then trying to find somebody that's already gone a bit ahead of you. So because I know that there are a lot of people that like to recommend different tokens and like to recommend different cryptocurrencies, and then you don't want to be discouraging to people, but you also don't want anyone to start like running down that path and then end up in a legal situation, or just end up losing their money for where they could have been invested, that's somewhere where it's more solid and there's a bit more legal complexity that has been developed because of the fact that we know where it stands. It's for those of us working in law in other areas, having a legal personality means that there can be laws developed to interact with you. But if you have no legal personality, if you're essentially stateless, it's very difficult then to have clear rules and regulations about do this and don't do that. And if you do this, then this. You don't get that with tokens at the moment. So until I do hope that, things will start moving along faster. I think that there are a lot of people at the congressional level and different areas of the executive that want to see this area clarified faster. But as we've seen, it's been a long time that it's not just Coinbase, but other entities that have been consistently going to the SEC and filing and then asking for, okay, well, if we didn't meet the standard, what are the standards? How can we meet that standard? I know Caitlin Long, they wanted to do, what was it, Inspire Bank or something similar. And, they were consistently going to the SEC trying to get some kind of feedback about, okay, like, well, how do we do this? Okay, we understand, we want to be regulated. We want to know what the rules are so that we can do this. But the responses were just so vague and really, non-responsive, essentially, that there was no way to adapt and move in order to get, or maybe, I can't remember the name of the bank, I apologize, but and that was her big complaint from the very beginning out of Montana, that, we want to get this bank up and running, but we can't because you're not giving us a standard or a system to plug ourselves into. So, so I appreciate that, for those, if you don't know what you're doing and you don't feel like you have enough information to really understand where you want to go from here, Bitcoin is a safe place, is the risk averse place to be in the crypto space. So I don't think there are any more questions. So I really appreciate your time. As always, you deliver some brilliant information, great presentations. For those who are watching us later, please feel free to ask any questions in the chat, because we do monitor that. And if there are follow-up questions, we'll be happy to, connect with you and give you that feedback. We love to hear from our communities. So those in the Trade Speakeasy Telegram or in the MetaRise Telegram, let us know your thoughts, let us know your questions, and let us know what topics you want us to cover next, because we want to make sure that we're always responding to what is, what is in your mind and what is maybe bothering you or interesting to you or what you feel curious about. And we can, we can start producing, content to respond to your questions in this space. But again, as always, thank you so much, Winston. Brilliant presentation. So thank you so much for your time.
Thank you. Thank you for having me, and looking forward to the next one.
As am I. I really look forward to these because you're just brilliant. You present so well. So thank you so much.
Very welcome.
Right. Then I will say goodbye for now.